you expect that CPI number to come in the low threes. How does that impact how you're positioning? Are you in the camp where we potentially see rate cuts coming in sooner?
No, I'm in the camp of rate cuts coming later in the year, next year, in the fourth quarter. We do think the Fed is going to take the position. We don't think they're going to raise anymore. We think they're pretty much done. But I think rates are going to stay higher for longer, just as an insurance policy, because remember, their target is 2%, and it's not going to get to 2% till maybe 2025. So they're going to be a lot slower into reducing rates. And I think that will be a little bit of unpleasant for the market next year, but I think they'll deal with it.
So does that mean you'd still be wary when it comes to rate-sensitive stocks and sectors right now?
Yes, I think we're positioned more into growth, and we're positioned more into companies that actually have some very good earning power, because we do see the economy slowing down, which it needs to do to get inflation a bit under control. We certainly welcome tomorrow a CPI number in about a 3.3% range, and that would, it's going to leave the Fed on the sideline in terms of raising rates, which is very good. The market could deal with that, and they can deal with rates higher for longer. And I think that market is, we're positioned for that. I don't know if the market is, but we're positioned for that. And there's still a lot of growth in a lot of companies, and we expect actually a nice rally before year end.
You see the biggest risk at the moment as still the ongoing Gaza conflict. How do you see that playing out in the markets?
Well, as long as it's contained, as long as it doesn't spread, and then I think the risk is minimal. If for some reason Iran was to get in or becomes a much bigger war, then that could disrupt the markets. And then, of course, you still have the shutdown, the potential shutdown of the government. And so those are really some of the biggest risks right now.
You do like short-term fixed income at the moment, though, with that assessment of where the Fed is at in the cycle.
I do. I think short-term interest rates are very attractive. And we're actually going a little bit more to midterm, and maybe even for some, trying to look a little bit longer, because we do, if we're right and the Fed is basically almost done, if not done already, then we want to lock in some rates, because these are attractive rates and we haven't seen them in 15 years. And that really allows the 60-40 top portfolio, the 70-30 top portfolio to have a good head start by having that fixed rate much higher than it used to be. So we do like some bonds exposure here, and short to midterm.
Let's talk about some of the thematics that have really been gaining prominence, and we can start off with AI. Are you still kind of looking for companies that have actually found a way to monetize this theme going forward? Because there's still a lot of capex going into AI for a lot of these businesses.
Yes, I think this is a major change. We haven't even seen the beginning of the effect of AI and the companies, and we think that is an area that, I know it's up a lot, but we do think it hasn't even seen their potential, and it's something that is driven by actual technology and not necessarily interest rates and so forth. So we really like that area, and there's many companies that get into it. As you know, any company that talks in their earnings about artificial intelligence and so forth, the stocks do well. And we think that it's going to continue, because they're going to be monetizing that, and their earnings should reflect the benefit of AI.
The weight loss drugs are something else that you've been looking at very closely. How does the potential price war, not just within developed markets, but also developing markets, play into how you trade that theme?
Out of anything, I think last time I was on with you, I talked about it as well. I really think that this is a game changer. This weight loss, I see clients coming in all the time now, losing 25 pounds, 30 pounds, and they're feeling great. The effect on our healthcare, the effect on GDP, if we can reduce the cost of healthcare, which so much of our GDP goes to, it's going to be a game changer. And if eventually Medicare, because it's going to save the cost of heart conditions and diabetes and all the other complications of weight loss, of weight gain. The fact that you can reduce all that is going to eventually allow Medicare and insurance companies to start paying for these drugs, and the usage of it is going to be tremendous. We only have almost less than 5 million people using these drugs right now. One of the problems is they can't make them fast enough. And if you go outside the US, it hasn't even started. So the growth potential, if there's one idea that I'm very, very bullish about, is the weight loss drugs. I think it's a game changer in every way. In individuals, people feeling are so much better and healthier. To these companies, we can just make these drugs fast enough and start mass distributions, and also having paid for by some of the insurance company. I think the upside is quite high.